Hello and welcome to P7 Prepare to Pass session being organized by ACCA Pakistan. I am Kashif Kamran, your tutor for this Prepare to Pass session. Before formally starting off with the Prepare to Pass session, I would first like to share with you my brief tutor profile, followed by some of the challenges the P7 student should be equipped with in preparing for the P7 paper, as well as the structure of the course from Monday to Saturday, so that you can effectively plan your Prepare to Pass session. In terms of my tutor profile, I am into teaching for over 10 years now. My specialization includes the P7 and the F8 paper, and the qualification supplements my knowledge into the F8 and P7 paper. Teaching this paper for over 10 years now, I have a distinction of achieving higher pass rates than the global pass rates, which are normally lesser and remain in zone of like 30% each sitting. Beside that, my students in P7 has also attained Pakistan-wide position in 3 instances in June 11, December 16, and March 17 exams. In terms of my qualification, which keeps supporting my F8 and P7 paper, is that I am a fellow Chartered Certified Accountant. I do have a certificate in international auditing, and I'm a CA finalist from ICAP. With that experience in education, and with that experience practically, I try my best to deliver this P7 Prepare to Pass session and enable you to achieve success in March 18 examinations. Now towards some of the key challenges which are part of the P7 paper, which a student should be knowing attempting his or her exams. Now, before starting to speak of the challenges, I would encourage all the attendees within this webinar to keep posting their questions on a frequent basis so that your participation is understood within this session, and I can promptly answer your questions throughout the session. Now, what I believe for paper P7, if you need to be better prepared for the March 18 exams, P7 has a lot of challenges. The 2 of them, which I believe is the most significant challenges when it comes to P7 paper, is being a manager. In P7, you need to demonstrate your maturity, which is very important. In terms of maturity, you need to ensure that the case study which is given to you, you are into that case study and you are working in the case study as a manager, and you try to play a role of a manager across the case study. When you are in the case, ensure that you are very specific into the case and you're not putting anything into the journal context. The case should be absorbed. Anything given in the case study should be better utilized, should be better used. You should demonstrate proper analytical skills. At the end of the day, it's all about absorption and absorption of the case study, which is very important. If you keep yourself involved in the case, you will better demonstrate your analytical skills. You will be better skeptical within the case study, and that will lead to a proper absorption of the case, which will increase your scoring opportunities in a P7 paper. Writing a lot of journal contents, or writing a lot of definitions, or writing a lot of backgrounds, introductions, writing a lot of journal stuff coming from the textbooks will not enable you to demonstrate that maturity of being a manager, and would then lessen your marks in P7. So maturity plays a crucial factor or a crucial challenge in helping you cross the 50 barrier in the P7 paper. Once I come to the practice session, I'll be projecting how would you demonstrate that maturity being a manager in a P7 paper. Another challenge, which is in the P7 paper, is to attempt 4 questions in 3 hours. This is a big challenge. With the tendency to write more, or with the tendency to write in journal, not specific, normally student gets down with an incomplete paper or not completing the 100% paper within the 3-hour bracket. I've normally seen students coming out of the exam hall with almost like 80 to 85% paper done, and sometimes even lesser than that. So okay, I will encourage your queries coming through the chat window so that I know that you're participating in this webinar, because so far I'm unable to see any questions coming on my side. So I want to see more and more questions coming from your side. So I know you are participating and you are within this session. Okay, so in terms of the time management, you need to attempt the 4 questions in 3 hours, which itself is a challenge. Once I come on Saturday, which is the debriefing day for the mock exams, I will clearly be emphasizing that how can you balance your 4 questions in 3 hours. I've mostly seen students when they go into the exam hall that normally the section A, which is 60% of your paper, takes most of the time. I've even interacted with students who tell me that near to in like 2 hours or in like 2 hours and 15 minutes, they are into the section A, which is quite a disaster for the rest of the paper. So you need to balance your paper. You need to ensure every question is given an equal weightage, because every question contributes to your success in P7 paper. So on Saturday, which is the mock debriefing day, I'll be putting a proper emphasis of how you handle these 4 questions in a 3 hours time, and how much time specifically you should be giving to each question in the exam paper. Remember, completing a 100% paper could be the first assurance or could be the first guarantee that you might get through the 50 marks per year. Anything less than that would be a big challenge. Now moving on to some of the journal reasons of low pass rates in P7, and specifically some of the pass rates which I believe are more important when it comes to failing in P7, is a lot of students tend to write more when less is required, and a lot of time student writes less when more is required. I've seen so many students in P7 who are unaware of the marking schemes. They have no idea of how much marks are allocated to each requirement. I normally see students that they do read the examiner answer, but while they're reading in the examiner answer, they don't tend to focus on the number of marks available. And in that absence, either they tend writing more in the exam paper or they tend writing less in the exam paper, both of which are risky. If you're writing more, you're wasting your time. If you're writing less, you're wasting your marks. So you have to be better equipped with the marking scheme. Throughout my session, I would be emphasizing on the marking scheme, which is quite static for the P7 examiner, and you should have the marking scheme on your fingertips when you're preparing yourself for the exams in March 18. Just an example, suppose if a question comes on audit risk, and the audit risk question is worth 16 marks, 1/6, and the examiner is asking you to evaluate the audit risk, and the marks given is 16, 1/6. If you are unaware of the marking scheme, you might end down writing 16 audit risk. That means you've given every risk 1 mark. Now that's a big waste of time, because when we look at the marking scheme, the examiner says each risk is worth 2 marks. So in the context of each risk worth 2 marks, I could have written even 8 audit risk, and I've completed my 16 marks answer. Could have saved a lot of time, which is very precious in a P7 exam. I'll give you more examples of marking schemes later in my webinar as we proceed further into the session. The second thing where I believe student tends to lack is that from a case study, they will be able to identify the problems, they will be able to identify the issues. But most of the time, when it goes about elaborating the issue or explaining the issue or evaluating the issue, student tends to lack in terms of their elaboration. Students are very good into identifying a problem, identifying an issue, identifying a certain point from a case study. But when it gets to the critical evaluation or when it gets to the assessment of that issue, normally they tend on the weaker side. They do not demonstrate the maturity that is needed of being a manager. And obviously that's all about the drafting skill, which I will be covering throughout the day and throughout the session from Monday to Friday. Illegible handwritings and poor presentations, I agree or disagree with that reason for low pass rates. I believe presentation plays a crucial part in a theoretical paper. You need to present your answer fairly well. You need to use good amount of headings and paragraphings. I've seen a lot of students writing in very congestion, or their paragraphs do not show proper breaks. So I prefer that there are proper paragraphs, and paragraphs are well structured. There is a definite break between paragraphs. And yes, headings is something you can utilize in a theoretical paper. Do make the presentation on a better side. The lack of fundamental knowledge, obviously that's a concern area. The students should know the book. The students should know the technical articles written by ACCA, which are available on ACCA website. I think the articles are a better source of knowledge, and you should utilize these articles to the best of your ability ahead of your exams in March 18. One last thing, and exiting from some of the challenges. When you're attempting your P7 paper for March, you should know your examiner, and you should know what your examiner expects from you. Lisa Weaver, she is the examiner for the P7 paper, and she is an examiner which has been unchanged for over 12, 13 years. In my association with this paper for 10 years, I've never seen this examiner changing. She is with the paper, and that has made this paper so static, so predictable, so organized over years. What she believes is she wants students to understand the core syllabus area, which is very important. I've seen a lot of times students spending time understanding the full syllabus, understanding the miscellaneous parts of the syllabus, and spending too much time on the book reading. Understanding the core components, I'll just give you the definition of what core components are. Secondly, the examiner wants students to practice plenty, a lot of practice. Honestly, practice will enable you pass P7, not the bookish knowledge. You need to be very sure that you've practiced a lot of past papers. And when I say you have practiced a lot of past papers, please ensure you're practicing past paper in the inverse order. That is from 2017 and going backward to like 2013 exams. Sumaya Hassan, I'll be emphasizing on the important parts of the syllabus as I'll proceed further into the webinar, because my slides cover the important areas of the syllabus, and you will be having a better idea of what important syllabus areas are. Muhammad Umar, in terms of how many lines per para is appropriate, that varies from a case to case. There cannot be any hard and fast definition of what is a reasonable paragraph, but normally between 4 to 5 lines makes sense for writing a 1-mark answer. More importantly, the examiner wants the students to read around the syllabus, not through the syllabus. So if you spend a lot of time reading the textbooks, going into the textbooks, you're wasting your time, because you should have practiced more for your P7 exams. And last but not the least, you have to use the sensible exam techniques on the day of exam. That is exactly attempting the 4 questions in 3 hours, which itself is something very critical. So if you want to get past in March 18 exams, please assure that you follow the Lisa Weaver success formula. Understand the core components, practice plenty, read around the syllabus, and use sensible exam techniques. I hope this all gets into your success into March 18 exams. One last thing before starting off with the P7 Prepare to Pass webinar. The question paper format, which itself is very important. I believe the attendees on this webinar are from 2 diversified sets, those appearing in P7 exams for the first time in March 18 exams, and those repeating P7. So those who are repeating P7 know the paper format very well, but again, those who are going for the first attempt to P7 paper should be very clear about the format of the paper. There are 5 questions in the P7 paper. The first and the second is the compulsory question, which makes up the 60 marks of the paper. The 35 marks question, the 25 marks question make it compulsory. The question 1 focus on a core syllabus area, which is risk assessment, and a student should be stronger on risk assessment to get good marks in the first question. The second question is either on evidence or on other assignments. In the last many attempts to the P7 paper, there has been a good amount of balance between examiner testing other assignments and evidence in the second question. Then in the third question, which is an optional question, or which is the optional section where a student needs to opt for 2 out of 3 questions, the question 3 itself could be on evidence and other assignments. That's just the vice versa of the question 2. The question 4 is a very definite question on ethics in most of the exam settings. I think 70 to 80% of the time, or in the past exam settings, the question 4 has been a very dominating question on ethics. And the question 5 is on reporting. You have to choose between 3, 4, 5. You have to choose 2 questions from 3, 4, 5. And I normally believe question 5 is a better choice question. Then you have to make a decision in the exam hall. Will you go for 3 or 4? You have to take your decision. But I think you should go in the exam hall prepared with reporting question. That's more like a rule-based question. That's more like a static question. And I think your performance within that question should be good if you know the basic rules of reporting. So that is a paper format, right? And itself spells out the core syllabus areas. Planning is a core area. Other assignments is a core area. Evidence, ethics, and reporting. So as per the Lisa waiver, you should understand the core syllabus, right? So this particular slide highlight the core syllabus area of the P7 exams. Okay, I'm getting a lot of questions from the attendees participating in this webinar. Some of the questions I'm going through would be answered within the next 10 to 15 minutes as they are already incorporated within my session. And some of the journal queries I'll keep emphasizing on as I proceed further. Rohit Kumar, I've got your question noted. I'll be responding to that just within the next 15-20 minutes. Ali Ajmal, Osama Sabir, Ehsanullah, Abdul Wasik, I'm getting all your questions here, but I'll be responding to them as and when I get time throughout the session. Okay, now starting off with the main emphasis, which is the P7 Prepare to Pass webinar. From Monday to Saturday, what you would be learning. Now, I have structured this P7 Prepare to Pass session with each day allocated to one core area of the syllabus so that you have a better definition of the core syllabus. Sumaya, you just asked what are important areas of the syllabus. So these are exactly the important areas of the syllabus from day 1 to day 5. On the day 1, we'll be emphasizing on risk, which is basically the first question. And when in terms of risk, I'll be emphasizing on audit risk, risk of material misstatement, and business risk. On day 2, I'll be working on the ethical and professional issues. On day 3, the focus would shift onto evidence. On day 4, the focus would be on other assignments, particularly the prospective financial information and the forensic. And on day 5, we'll be discussing reporting, the new report format, the key audit matters, and the going concern would all come into discussion on day 5. The day 6 is about the debriefing, the mock debriefing, where I would be spending time with the attendees to help them understand how they should be attempting a proper answer and how they should be attempting 4 questions within a 3-hour time span. Okay, so let's begin with the day 1 of this P7 Prepare to Pass webinar, where our focus is on risk. Now, just before proceeding on with risk, again, looking at the queries coming in from the students, more about formatting, more about how much should you write for 1-mark answer, a number of students putting in the emphasis that they have failed into the paper twice, thrice. Is it compulsory to gain 50 marks for question 1 and question 2? That has been a question from Ali Ajmal. Obviously, you cannot gain 50 marks from question 1 and 2. It's very difficult. The question 1 and 2 is weighted like 60 marks, and gaining 50 from 60 marks, I think that's next to impossible. If you're gaining 50% of your marks from the first 60% of the marks, you might go down becoming a topper in P7. So I think honestly that's more difficult. In terms of Zishan Ali Abasi, is it a video lecture or just audio? Yes, this is just an audio lecture. It's not a video lecture. Yes, even if you're attempting a 100% paper, that's not a guarantee you get through, because it all depends upon the content you are writing into the paper. 100% paper and you come out of the exam hall, you cannot say I get 50, because it all depends upon what you have written down into a 100 marks answer. Okay, I'll keep responding to these queries as I move ahead into the session, but let's first focus on the first block, which is risk assessment. Okay, now starting with the block 1, which is risk assessment, which is the agenda for this first day of webinar, let's start to understand some basic technicalities of risk assessment, which will better prepare you attempting a question on risk. Now, whenever I start a topic within this webinar, this first introductory slide would guide you what sort of questions will be coming into the session and what sort of questions you will be taking for home assignments, which you will be practicing over the next 5 days. In terms of the article, currently this box has been empty. This box will keep filling in as and when there is a need of an article you should be reading. So currently for risk assessment, I'm not recommending any article which you should be reading for this topic. But yes, in terms of the practice, there are 2 questions in session and there are 2 questions in home. Now the attendees, particularly those attendees who are repeating P7 and want to address those attendees even who are appearing for first attempt to P7, P7 has 3 types of risk assessment techniques, one being known as audit risk, the other being known as risk of material misstatement, and then another known as business risk. Now, even if I before proceed with each one of them, business risk, even before we come to the concept of it, was last examined into the September 17 exams. And business risk repeats into P7 after a very long cycle. If I remember, business risk came into 2012 settings. Then it came down into 2014 settings. Then it came down into 2017 September. So that's quite a long gap over which business risk is tested. One of the prime reason is that business risk is an easier topic, and normally the examiner is very comfortable with students' answer on business risk. Therefore, test business risk lesser. So if I want to make probabilities for March 18 exams, I will not include business risk into my March 18 probabilities. Audit risk and risk of material misstatement, yes, these 2 are definitely important. And the reason of that is students struggle with audit risk, students struggle with risk of material misstatement, and that is exactly the criticism of the examiner. Examiner believe that student tends to perform under on audit risk and risk of material misstatement, and that is the reason the examiner keeps emphasizing on audit risk in almost every exam setting. If I look at the last 5 attempts, the hybrid versions of the paper, which has been uploaded on the ACCA website, audit risk dominates the last 4 exam settings. So the clear message coming from the examiner that you need to be good on audit risk, you need to be good on risk of material misstatement, and that's exactly where I would be emphasizing. Okay, starting on first with an audit risk approach. Yes, there are some students asking for namaz break. I'll be giving in a namaz break over the next 15 to 20 minutes. Just completing the audit risk approach, I'll be coming across the namaz break. In terms of the audit risk approach, Ifra Anjum, audit risk tested in December 17. Yes, it was tested in December 17, but again, the examiner has so much criticism with audit risk that it can repeat back. What I believe is that you can expect audit risk on a non-group situation this time, because since last many attempts, audit risk is coming on the group situation. So if the examiner wants to take a break from that, might put a non-group situation for audit risk. But I believe audit risk is important for March 18 exams. Okay, now in terms of the audit risk, a student should know that audit risk is a combination of inherent risk, control risk, detection risk. And a student should have a sound idea of the definitions of inherent, control, detection risk to able to identify these risks out of the case study. A student should not classify the risk into the three categories, which is inherent risk, control risk, detection risk. Or when you're attempting an answer, you're not answering a question like this is an inherent risk, or you're not answering a question like this is a control risk, or you're not even answering a question like this is a detection risk. You just need to focus on the audit risk broadly, and you need to tell examiner why it is an audit risk and why you believe this is an audit risk within the given case study. Okay, let's understand it better. I hope you are aware of this fact that the first two components, inherent risk and control risk, makes up the risk of material misstatement. So that means if you're preparing yourself for audit risk as a student, you're also preparing yourself for attempting a question on risk of material misstatement. Because if I cut short, that means audit risk is equal to risk of material misstatement into detection risk. So the only difference in attempting an audit risk question is that I'll be focused on a detection risk component, whereas when I'm attempting a ROMM or risk of material misstatement question, I'll just be focusing on the ROMM. I'll not be worried about a detection risk in the case study. So I think more or less both are the same, with the only exception of detection risk being the minor component. So if you know audit risk and you're better prepared for audit risk, you are directly or indirectly prepared for a risk of material misstatement questions. So we need to find how can we be good into audit risk, or how can we be good on risk of material misstatements. Okay, in terms of the risk of material misstatement, which is a crucial part of the audit risk, which is the crucial part itself of a risk of material misstatement model, a student should know that when you're reading a case study, there might be many accounting treatments within the case which you need to pick out and to identify whether that particular accounting treatment give rise to a risk of material misstatement or do give rise to an audit risk. Remember one thing, the amount, the classification, the presentation, the disclosure is very important. Suppose there is an accounting standard, but something has been wrongly classified. You need to pick a wrong classification as a risk. Something has been wrongly presented. You need to pick the wrong presentation as a risk. Something has been wrongly disclosed. You need to pick up the wrong disclosure as an accounting risk. If you look at the accounting standards do tell us about how to measure something. They do tell us about how to recognize something. They do tell us about how to present something. They do tell us about how to classify something. So if there is an accounting standard, there are chances that the management has not done the right accounting treatment. If the management has not done the right accounting treatment, then obviously that will give rise to an audit risk, or that will give rise to a risk of material misstatement in the financial statement. So a student should be good on accounting standards. Accounting standards plays a crucial part when you're attempting a question on audit risk, or you're attempting a question on a risk of material misstatement. So you should know the summaries of the accounting standards. You should know how things should be recognized, how they should be presented, how they should be disclosed. Because if you're weaker on the recognition, you're weaker on the measurement, you're weakened on the presentation, you will tend to struggle with the question on audit risk, or you will tend to struggle with the question on risk of material misstatement. So the first rule of thumb to be good on audit risk and risk of material misstatement is to be good on your accounting standards. Now, if anyone needs the summaries of the accounting standards, which are not part of the webinar because it's just a 15-hour duration, anyone needing the support of accounting standards or the summaries of the accounting standards, I hope my email ID has been shared with you or my WhatsApp number has been shared with you for requesting any material which is beyond the webinar material. I'll be free sharing with you my accounting standard summaries, but provided you do email me or you do WhatsApp me for the need of that. Okay, now a very important thing which you should try to understand, that in terms of an audit risk question or in terms of a risk of material misstatement question, something which is very important is to focus on an MTR approach. This MTR approach is a very important mnemonic which you should make use of in the exam paper. Now, what does MTR stands for and how important MTR is? How important MTR is in terms of answering an audit risk question or in terms of answering a risk of material misstatement question. Let's first try to understand that. Okay, now just before proceeding with that, if anyone needs any extra documents from my site and wants to email me, my email ID is Kashif Kamran, that's Kashif Kamran @gmail.com. I'll again share my email ID towards the end of the session. Okay, so my email ID is kashifkamran @gmail.com, and I'll be sharing this email ID again at the end of the session. So if you need any resources which are beyond the webinar, I'll be more than generous sharing that with you. So you're better prepared for your P7 sessions in March. Okay, in terms of the MTR approach, which I just mentioned, is something very crucial for attempting a question on audit risk or attempting a question on risk of material misstatement. Let's understand what an MTR approach is. Okay, now in terms of the MTR approach, the M obviously stands for the materiality. What I believe is that in a question on audit risk or ROMM, you should determine and comment on the materiality, because every time you do so, you're scoring half a mark. Now, I'll illustrate that as I come to an exam paper, that determining the materiality or commenting on the materiality is such an important phenomena, and you should be good into that when you're attempting a question. Secondly, the treatment. If you think that the treatment is silent, then elaborate the treatment concisely. And secondly, if you think that the treatment given is a wrong accounting treatment, then criticize the treatment. Don't start to write in the full treatment. For example, the examiner tells you research and development cost, and he puts a full stop, or he says goods are imported, full stop. Now, when he says research and development cost, when he says goods are imported, he's giving you a reference to IS 21, goods are imported. He's giving you a reference to IS 38 when the examiner is putting an emphasis on research and development cost. So most of the time we see in P7 that examiner tends to give you a sentence, but there is no accounting treatment after. So you need to think of your accounting treatment after. You need to refer to the IAS, and then you need to write in the accounting treatment. but that accounting treatment needs to be written very concisely. Remember, the accounting treatment has 1 mark. So you cannot elaborate on the accounting treatment. You cannot write very journal accounting treatment. You cannot just go about elaborating the accounting treatment because it's just for 1 mark. Now, obviously, I think a lot of attendees do ask me a question for how much we need to write for 1 mark. So again, 1 mark is like 4 to 5 lines max. So if you're even writing a treatment concisely, that means 4 to 5 lines, not more than that. Secondly, when the treatment is wrong, suppose the examiner says the asset held for sale is classified as a non-current asset. Now, if you think the asset held for sale is classified as a non-current asset, you will criticize that. You will say, no, the asset held for sale can't be classified as a non-current asset because it is to be sold under 12 months, so it should be classified as a current asset. Rather than you start speaking of the whole IFRS or IFRS 5. You just need to focus on the issue which is given in the case study. I've seen a lot of students writing journal IAS, writing journal IFRS, which has no link to the case. Please remember that whatever accounting standards you write, you need to be very specific to what's given in the case study. You cannot just start writing the journal treatments, journal accounting standards, because that will give you nothing in P7. You need to be very particular to the case, exactly what's happening in the case study. The last thing, the risk. In terms of the risk, there are 2 types of risk, whether you're attempting a question on audit risk or you're attempting a question on risk of material misstatement. If in the financial statement, then clearly mention that the financial statements could be materially misstated. For example, suppose the company has not given a disclosure. If a company has not given a disclosure, then I would write in the exam paper that the financial statements are materially misstated, or the financial statements could be materially misstated if the disclosure has not been given. Secondly, if the risk is in the account balance, then specify which account balance could be over and understated. For example, the company has not recognized a provision. If a company has not recognized a provision, then I will say the expense is understated, or I will say the liability is understated. I need to be very specific to the account balance. Or if the research cost has been capitalized, I will say the expenses are understated. If the research cost is capitalized, I will say the expenses are understated. I will say the intangible assets are overstated. So there are 2 types of risk. Either the risk is in the financial statement or the risk is in the account balance. Normally, the financial statement risk relates with disclosures. And normally, in an exam paper, when something relates with like provisions, account balances, something relates with like share-based payments, then you have to be very particular about the account balance. If you're working on a share-based payment, you will say the expense is understated if the share-based payment expense has not been recorded, so on and so forth. But you have to become good on this MTR, materiality, be very confident on that, the treatment, how to do that in the exam paper, and the risk, Okay, I'm just taking in a 10-minute namaz break. It's like 6:40 p.m. Pakistan Standard Time currently. I'll be resuming back at 6:50 p.m. Pakistan Standard Time. In between that time, keep posting your queries. I'll be responding to them right after the namaz break. And whatever have you understood, keep just revising it. We'll resume shortly in 10 minutes. Okay, welcome back. It was just a namaz break for 10 minutes, and we are resuming back from the topic, the audit risk and risk of material misstatement. Before just moving back to the audit risk and risk of material misstatement, we were focusing on the MTR, materiality, treatment, and risk. I just came across some questions from attendees, participants to the webinar. A lot of students are asking questions about whether to give reference to accounting standards or not. Be very clear that a reference to an accounting standard does not have any marks. The accounting standard, the content of the accounting standard, we are writing the treatment, or you're writing the disclosure, or you're writing the presentation, whatever accounting rule you're writing has marks. But if I say as per IAS 38, or if I say as per IFRS 2, yes, that is good. It creates an impression. If you're very spontaneous on that, then be very spontaneous. In a go, you can write IFRS 2. In a go, you can write IAS 38, comma, and you start writing an answer. That's very good. But does it carry any marks? No. The marks is with the content you're writing about the accounting standard. A lot of time I've seen students writing the IAS 20, and then they put the title of the accounting standard. That's a big waste of time. So even if you're very habitual of writing the accounting standard numbers, then be very clear just to keep it confined to an accounting standard number. Don't just write the title of the accounting standard. That's much waste of time. So you can work with accounting numbers, accounting standard numbers, or you can work without them. It all depends upon you. It's more about the content. It's more about the standard treatment you're writing from the given accounting standard. What are relevant standards? I think there was a query from an attendee. What are relevant standards to P7? I just mentioned that I have my own summaries to the accounting standards, which supports the paper P7. I can email you that. It can be on the WhatsApp group. The WhatsApp group has already been created, so that can be used in for passing any such material which relates with the relevant accounting standards. One of the students asked me whether to practice past paper or the revision kit. I think that's up to you, whichever way you want to go with. Some students are comfortable with revision kits, some are comfortable with past papers. So I cannot have a definite answer to that. In terms of a tutor, I prefer the past papers. I don't prefer the revision kit. So you can take your own decision on that. Yes, there was a question which I would like to address for all the students. The examiner answers are too long, and I think that's been a frequently asked question on webinars, off webinars, in the classroom. You need to be very clear. The examiner answers are tutorial guidance. The examiner answer is a guidance to the question given in the exam paper. An examiner writes a lot because he wants to educate you on the subject matter. He wants to give you more points than required. Suppose if he asks you a question on writing procedures on goodwill, and there are 5 marks on procedure for goodwill, definitely I need to write 5 procedures in exam paper. But when you see the examiner answer for procedures on goodwill, you will see like 10 procedures. Now you will say, when I go to the exam hall, I'll be writing 10 procedures because examiner wrote 10. No, because obviously there are marks allocations. The examiner has written a marking scheme for you, and the marking scheme says 1 mark per procedure. So how much you should write is the marking scheme. The examiner answer is just a guidance. You can learn things from the examiner answer, but you cannot learn the length of the examiner answer, because otherwise you will be unable to complete the 4 questions in 3 hours. There are many more questions which I'll keep answering over the session. The writing scales of P7 is comparable to P3 paper. I'm just holding that on. How much P2 is required in P7 was another question from an attendee. I'm holding that on. 1 mark, how much to write? That's been like a very frequently asked question so far since I started the session. I'll be winding that up towards the end of the webinar. 1 mark is equal to how much? Is IAS Plus a good website to revise your accounting standards? Was a query from one of the students specifically. Yes, it's a good source. You can revise your summaries to accounting standards from IAS Plus website. The WhatsApp group has been created. You must have got a link to that, so you can be part of it, and I can keep sharing documents with you over the WhatsApp group. Okay, now moving back towards the audit risk and risk of material misstatement. In terms of the audit risk, in a case study, when you're reading a case, the question one, and the question one is on audit risk or a risk of material misstatement, you can relieve your stress in the exam hall if you exactly know from where will you identify the risk from the given case. Now, obviously, in a question one, there might be many journal statements which can help you in identifying an audit risk. I'll just give you some examples of journal statement on my next slide. But yes, a journal statements in a case study can be a source of identifying risk, audit risk, risk of material misstatement. Accounting treatments. The accounting treatments obviously is another source of identifying an ROMM and an audit risk. A wrong accounting treatment where you believe the accounting treatment is not in line with IFRS or IAS, then obviously that wrong accounting treatment has to be a risk of material misstatement or an audit risk. The results of analytical procedures. I think many times examiner gives you results of ratios, like examiner gives you receivable days, examiner gives you current ratio, examiner gives you inventory days. You need to make use of those ratios in identifying risk. For example, if receivable days are going up, then you need to be assured that if the receivable days are going up, there might be a risk that the bad debts are not created. And if the bad debts are not created, then receivables could be overstated. So try using the ratios given by the examiner. It's not just the examiner gives you ratios as part of analytical procedures. The examiner do also give you comparisons of the current year with the last year. Suppose the examiner tells you sales have increased by 46% from the last year. You will be amazed, 46% sales have increased from the last year? And that's quite a significant surge in sales. You might be skeptical saying that the sales could be overstated because that's the nature of sales. So 46% is a significant rise or 46% is a significant surge. So in terms of that, the sales could be overstated. So try making use of the ratios and comparisons given by the examiner in the question number one. And there can just be the vice versa. He gives you numbers and he asks you to do the ratios. There is a case, many cases in past papers where the examiner gives you extracts of the financial statement. And as a student, you need to use the extracts. You need to use the extracts making ratios. You need to make the extracts working on comparisons. So either the examiner can give you the ratio in the exam papers, or he can ask you to do the ratios yourself. Irrespective of that, you need to understand that the numbers, the financial statements is a prime source of risk. So if there is any fluctuation in the financial statement, you need to be very careful about that. So let's recap the sources of audit risk, the sources of risk of material misstatement. When you're attempting a question one, they can come from journal statements. They can come from accounting treatments. They can come from results of analytical procedures. They can come from extracts of financial statement given. Let's do an exercise on each one of them. Let's take some examples of journal statements from past paper which are so much good into exam paper and can control your stress level when you are attempting the first question. When you're reading the first question, which is on audit risk or risk of material misstatement, you might have come across statements like, this is your firm first year audit of a client. Now, obviously, if your firm is doing audit for the first year of a client and you're attempting a question on audit risk, you will say that the firm would have less knowledge of business because it's the first year audit. And if the firm have less knowledge of business, that increases the detection risk in the case study. More importantly, if this is your firm's first year audit, then you have to be very careful that there might be some risk associated within the opening balances. And the opening balances could B. Materially misstated. So the journal statement, this is the first year audit, or your firm is conducting the first year audit. Now obviously in terms of the first year audit, you could have less knowledge of business, which increases the detection risk. And the first year audit, there could be a risk in the opening balances, and the opening balances could be materially misstated. So you can make use of these journal statements. They have no accounting standards, right? And they can make your life easier in exam paper, provided you get such statements within your exam settings. Secondly, the company is listed. Now that is such a journal statement that the company is listed, but I hope you are skeptical in exam paper that if a company is listed, then you need to demonstrate your skepticism as a manager. And what's the risk? The risk is that the listed company has a risk of bias. The listed company has an incentive to manipulate the results. Incentive. Now obviously if a company is listed, the company has an incentive. The company has an incentive to massage the figures. The company has an incentive to window dress the financial statement. And being an auditor, you need to be very skeptical of that. You need to be skeptical that there might be, the company might show better performance. The company might show better sales. The company might show better profitability because the company is listed. Another equation which goes on the same track. The company is negotiating a bank loan. The same problem. If a company is negotiating a bank loan, again, they have an incentive. Obviously, if a company is negotiating a bank loan, they want the loan to be successful. And in order for the loan to be successful, they will manipulate the financial statements. They will show better current ratio. They will show better liquidity, because that is the only way they can get a loan from the bank. So when the P7 examiner says you are a manager, you need to be very critical of that. You need to be very skeptical of that. You need to be very analytical of that how you make use of such statements when you're answering a question. Another example, the finance director has left. Now, if you think the finance director has left, the finance director has a very strong relationship with financial statements. So if the director has left, it might weaken the monitoring of the financial statement. It might weaken the oversight of the financial statement. And you might come down to a conclusion that the monitoring of the financial statements or the oversight of the financial statement is weak. And that means the financial statement can be prone to material misstatements. The financial statement can be prone to material misstatements. The last example, there is no internal audit function. Now again, that is such a flat statement. There is no internal audit function means the controls, the monitoring. The monitoring is weak. If there is no internal audit function means there is no proper monitoring, there is no proper oversight, then that means, again, the financial statements are prone to material misstatements. So try making use of such journal statements. I've taken all these journal statements from the past paper. Now, when you start practicing for your March 18 exams, you will come across such statements from the past paper. Be very clear with them. Be very clear with them, and assure that you know how you're writing in these journal statements. Secondly, accounting treatments, which plays such a crucial part in a question on audit risk. Accounting treatments, which plays such a crucial part on the risk of material misstatement. Now, as I was just discussing, and a lot of students putting in the queries, as I can see in front of my chat's window, that there is a lot of confusion about accounting standards, how to link them down, how to write them up, how much marks are allocated, etc. I'll try mitigating all that over the next 10 minutes as I address the accounting treatments within the audit risk and risk of material misstatement scenarios. In the past exam papers, you must have come across such accounting treatments which have scoring potentials if precisely spelled out. Now, for example, there is a statement like sales are made in 60 countries.
Now, this is a very flat statement, but being a student from accountancy, you should know that if sales are made in like 60 countries, there is a accounting standard IAS 21. And you should be telling the examiner that if sales are made in 60 countries, then there is a foreign currency transaction which should initially be recorded at a spot rate and should then be retranslated at the closing rate. If like the wrong exchange rates are used, the company doesn't use the right spot rate, or the company doesn't use the right closing rate, then the exchange gain and losses can be overstated. Then your sales can be under and overstated. So sales are made to 60 countries, full stop, and you're thinking about an IAS 21 in the exam paper, and you're thinking about the foreign currency transactions, and you're thinking about the spot rate, closing rates, and how they can go wrong into the accounting context. The same happens with the next one. Suppose the examiner says in an exam paper, development cost relates to a new range of organic cosmetics. Now again, that's a flat statement. But I hope setting into a P7 exam hall, when he sees this word development cost, you can recall the IAS 38, and you can think that development cost can be capitalized, but there is a criteria. And if that criteria is not met, then the development cost should be expensed out. Now, you can give some examples of that criteria into the case study. For example, you can say there has to be a technical feasibility of completing the ongoing development. There might be availability of the financial resources to complete the ongoing development. There is an active market of the product being developed. But if you think there is no active market of the product being developed, or there are no technical feasibility of completing the product and something like that, then obviously the development cost should be expensed out. Same goes with short-term investments. Short-term investments were held at a cost of $8 million. Now, if you are better prepared on IFRS 9, you can pick a point from here that obviously the short-term investment should not be held at cost. The short-term investment should be held at the fair value. And any difference between the cost and the fair value should be then taken to the P&L. Now, obviously, if the management has recorded the short-term investment at cost, they should not have done so. So that is a wrong accounting treatment. They should have recorded it at the fair value. So that means the short-term investment is either understated or overstated. No accounting entries made for cash-settled share-based payment plan. Now that's very specific. The examiner is telling you that the management has not made any entries for cash-settled share-based payment plan. Now, obviously that means if no entries have been made, then the liability and the expense, both of them are understated. Obviously, the entry for a cash-settled share-based payment plan is to debit the expense, is to credit the liability. So the expense is understated, the liability is understated. Now, for example, if I have to criticize a student, no accounting entries have been made for a cash-settled share-based payment plan, and a student who is very much obsessed with accounting standards, not knowing what the examiner is asking you, he starts to write the IFRS 2 in journal, and he tells examiner that as per the IFRS 2, there are two types of scenarios, one being cash settled, one being equity settled. He writes the treatment for equity settled, then he writes the treatment for cash settled. The student is wasting time because the examiner is telling you it is a cash settled share-based payment plan. So your focus has to be on cash settled rather than wasting your time on equity settled. So be very particular, be very specific when you're writing in the answer for the accounting treatment. Last and not the least, it says 30% payment is received in advance. Now, obviously, you need to be very particular about how this 30% payment in advance is recorded. Now, obviously, being an advance payment, the risk and rewards has not yet been transferred. So you need to assure that this 30% income is treated as deferred income or is treated as an unearned income. It cannot be recorded as an income. So the payment in advance received should follow the IFRS 15 criteria, and it should be recorded as deferred rather than being recorded as income. Otherwise, your sales or your revenue will be overstated. So be very particular about accounting standards. I myself is very critical of accounting standards when I see students performing below par on accounting standards. They try writing too much journal about accounting standard. They will not think about the particular scenario. Just moving back to the short-term investment, they will try telling everything they know about IFRS 9. They will try telling that IFRS 9 includes the financial assets. They will try telling that the IFRS 9 includes the financial liability. They will speak about how financial liability should be recorded. They will speak about how financial assets should be recorded. That's a waste of time. You should just focus on short-term investment, and you should just tell examiner that the short-term investment is to be recorded at fair value. It cannot be recorded at cost. Thus, the short-term investment is either under and overstated. One last thing, the MTR approach, which is the mnemonic I just introduced a few minutes back, it is not possible to find M in each time. Suppose if I look at the examples above, it is not possible to find M each time. Sales are made in 60 countries, but I do not know the value. The value is a question mark. I cannot find the materiality. Development cost, but I do not know the value of the development cost, $1 million. I cannot find the materiality. Short-term investment is held at a cost. Now I know the cost. Now knowing the cost, I can determine the materiality. I can determine the materiality. You cannot just forcefully find materiality. Materiality obviously relates with numbers. Yes, materiality also relates with material by nature. Materiality can be qualitative. But sales are made in 60 countries and I do not know the value of sales. I cannot comment on its materiality. Development cost, I do not know how much is development cost. I cannot comment on its materiality. But yes, short-term investments are held at cost of 8 million. I know 8 million. I can find the materiality of 8 million. So be very particular, right? It's not essential that you find M every time. M can only be found when it is present, else M cannot be found. T, treatment. Treatment should be written. But again, that treatment written should be specific. The treatment written should be case. You cannot write journal treatments. You cannot write the whole accounting standard into your answer booklet. I've seen so many students who have given P2, P7 very close by, who have a very less variance between P2 and P7. They quote the journal accounting standard a lot, which is a waste of time. Lastly, risk. Please ensure you're doing a question on risk. You cannot exit from your paragraph unless and until you have explained to the examiner what is a risk. Now, I just told you that risk can be in the financial statement or risk can be in the account balance. So you have to be very particular. Now, just an example, if I say no accounting entries made for a cash settled share-based payment plan, then I need to know the risk. I need to know the risk that the expense is understated, liability is understated. So I have to be very particular about that. So you need to write a very specific risk. Now, how much is this MTR when you're attempting a question on accounting treatment? This MTR is worth 2 marks. If you can find M, you're scoring 0.5. If you're finding a T, you're scoring 1. If you're writing a risk, you're scoring half. But obviously, if there is no M, then obviously then you have 1 mark for treatment and you have 1 mark for risk. But every risk is worth 2 marks. Every risk is worth 2 marks. Okay, that is about the accounting treatments. Now, as I proceed towards the practice session, I'll be emphasizing more about accounting treatments, and I hope if there are any queries, relating with these accounting treatments, I'll keep seeing those in the chat windows. Again, I'll encourage the attendees, the participants, that on the slides I am on, if you have any particular queries relating to the slides, relating to the topic we are in, I'll prefer your questions coming to me through the chat window. Okay, now just before proceeding towards the financial statement extracts, there is a question from Bilal Qureshi, and Bilal Qureshi is asking, is there any possibility of an analytical procedure with audit risk in question 1 for March attempt? Yes, I do believe that audit risk on a non-group scenario should come in March exam sittings. And yes, a typical audit risk question which has numbers, which has analytical procedures, just like a June 13 question number 1. A Parker question. We must have done that, June 13 question number 1. So I agree, Bilal Qureshi. There is a chance of question like such in the March 18 exams. Okay, now towards the financial statement extracts and towards how important numbers are when it comes to identifying an audit risk and a risk of material misstatements. Okay, there is another question from Muhammad Tahir Ansari. He's asking how many ratios should be presented for analytical procedures in a risk question. Whenever the examiner specifically asks you to perform the analytical procedures, I think that has happened in the June 13 question number 1. The maximum marks for analytical procedures, if the examiner asks you to perform, is 6. So in terms of that, you need to work on 6 ratios from a case study. AP question is too time taking. Bilal Ahmed is asking that. I don't believe so, because you just need to perform the ratios. You need not to do any commentary on ratios. You must have seen the examiner doing commentary on ratios, but that's a waste of time. You just need to identify the ratios, and then you can make use of the ratios in your answer later. But if you start commentary on the ratio, as the examiner do in the answer, again, that would be a waste of time. Okay, one last question and moving ahead. Tayyib Sheikh is asking a question, will answer be different if question ask ROMM and audit risk? No, the way of answering question in ROMM and audit risk remains the same. There is no change of answer plan, with the only exception that you might find a detection risk in an audit risk question. Apart from that, the way of answering an ROMM question and the way of answering an audit risk question is the same. Okay, I hope I've satisfied you, Tayyib Sheikh, Bilal Ahmed, Muhammad Tahir Ansari. I'll come back to the other questions. Just one last thing. Salahuddin is asking a question, how to narrate the detection risk? Salahuddin, I'll be answering that question as I move to the past paper sessions. So just keep holding on your query for the next 10 minutes. Okay, back to the financial statement extracts. Now, one of my last exercise before we start the practice, the numbers. When you look at the question 1 for audit risk and risk of material misstatements, you must have seen many times examiner gives you extracts of financial statement, examiner gives you ratios, examiner gives you comparisons, or he asks you to do so. Numbers do play a critical part in your answers, and being a manager, you need to use these ratios analytically. For example, there is a significant surge. If something is increasing a lot, like assets, like income, then you need to be skeptical. They might be overstated. For example, if sales are going up, the incomes are going up, the assets are going up, and they're going up a lot, significant, then you need to be skeptical that they might be overstated, because that's the nature of asset, that's the nature of income, that income and assets are overstated. Significant decline. When you think something is declining significantly and that is an expense, if something is declining significantly and that is a liability, we know expense and liabilities has a nature that they are understated. You need to be skeptical of that. You need to be skeptical that a significant decline in an expense or a significant decline in a liability could demonstrate an understatement. So it's not just a surge, it's not just a decline which you're picking from an exam paper. It could be that something is static, it's not changing from the last year. Now, if you think something is static, it is also something very unusual, and it could be understated, it could be overstated. So anything static, suppose the finance cost and the finance cost the last year, the finance cost this year is the same. And in a question, it is written that the company has taken a new loan. Now you need to be skeptical as a manager that the company has taken a new loan and the finance cost in the last year and the finance cost this year is just the same. How can that be possible? So that means you have exercised your skepticism and you've identified your risk. That means the finance cost is understated. The last thing, implausible relationships. For example, sales have increased by 45% when it is written in the case that there is an economic recession. See how interesting that line is? Now again, being a manager, being skeptical, being analytical, you need to think sales have increased by 45% when there is an economic recession. How can that be possible? That means these sales could be overstated because 45% is a lot. So I hope you're getting some sense of using these numbers. You need to demonstrate you are a manager. You need to demonstrate that you are analytical being a P7 student. And if you think there is a significant surge, decline, there is something static in a case study, or something is implausible, then you need to relate them with an audit risk and a risk of material misstatement. So that is exactly winding up the first part of my session, which was to address the audit risk approach or a risk of material misstatement. Now, all the attendees, we're taking the next step. We're starting with the exam paper just to understand that how much we know audit risk and how to attempt a question on audit risk and a risk of material misstatement. So please revise what has been done through. Please be assured of the concepts that have been delivered, and please ensure that you revise these webinar slides very effectively, preparing yourself for an audit risk question. Now, just before proceeding towards the past paper and showing you how to handle a past paper on audit risk and a risk of material misstatement, which has to be a crucial part of your success, just answering few of the more questions. Muhammad Hossein Mahmood has been asking a question whether to write ratios under headings of appendix as written in the past papers. Yes, you can do so. That is just a presentation, but normally the examiner puts the appendix towards the end of the answer. I'll prefer you put it at the beginning of the answer because you will be needing the answers of the ratios across your answer. So if you put the appendix towards the end, then you will not be utilizing the answers of the ratios very appropriately. Sefula Riaz is asking a question. Please repeat the static nature. Okay, in terms of the static nature, I meant that if there is something static, for example, you're looking at an income statement, and in the income statement, you found that the finance cost the last year was 1,000. The finance cost this year is 1,000. There is no change. And in a question, it is written that the company has taken a new loan of a $10 million during the year. Now you have to be skeptical that if a company has taken a new loan of a $10 million, the finance cost remains the same from the last year. That means the finance cost is understated. Sometime the examiner will keep the values the same from the last year, and he wants you to demonstrate that the balances are static, and static balances could also create a risk of being under or overstated. I hope Saifullah Riaz have answered your question. Tala Shahid is asking a question. So do we have to import from the scenario the statement of risk we have identified? Suppose there is a risk in a question that raw material is imported, you can make a heading on top, imported raw materials, and then you can start writing under. A lot of copy paste of the case is not allowed. You cannot copy paste the case. You need to rephrase the case. I've seen students copy pasting a case a lot. Try to avoid it. Try to avoid it. Try just to be, try to take a crux out of the statement. So rather than taking a whole sentence from the case, Tala Shahid, you can just work on cut short. For example, research and development cost, you can say research and development cost relates to a new range of organic cosmetics. You can just say research and development cost rather than saying a new range of organic cosmetics. Okay, then there is another question from Ifra Anjum. In exam, can we write there is a risk or there might be a risk? It can be both ways. Most of the time, the risk is a possibility. I agree. Most of the time, the risk is written in like could be. There is a possibility because we're not sure about risk. But for example, it is written in a question that the company has not recognized the share-based payment expense. The company has not recognized a share-based payment expense means that we're very sure that the expense is understated. Now we cannot write in a tone of possibility. So either the risk is very obvious, then we cannot write a could be tone. But when the risk is unsure, we are unsure of the risk, then we can use the tone of possibility. We can use the tone of could be. I hope, Ifra Anjum, I have solved your question. A lot of more questions are coming in. I'm just holding again those questions for proceeding towards past paper. I'll be answering questions coming from Salahuddin. Augustine is asking a question. I'll be coming back to your question as well. But I hope Muhammad Tahir Ansari, Saifullah Riaz, Ifra Anjum, Talha Shahid, I've answered your questions. Bilal Qureshi, I'll come back to your question. Give me 10 minutes. I'm just starting off with the past papers. Okay, now in terms of the past papers, to start off with the session, let's first focus on the past paper, which is the December 2015 question. Now, in terms of the December 2015 question, which is right in front of you on your screens now, let's see how much have you understood the last 1 hour. If I look at this question 1 from December 15 exams, the Dali company question, see what is the examiner asking. I hope all of you know that the question 1 comes in an email format, and the email is from the partner to the manager. And every time the partner writes an email to the manager, the partner expects manager to do something which is part of the requirements. You can see the requirements split into A and B. Now it's quite obvious with P7 exams that the examiner would ask you to write the briefing notes. That is a very static requirement of the question number 1. And this briefing note carries 4 marks. I'll be doing a proper debriefing on the briefing notes once I come to the mock exams on the Saturday. But yes, you should know that the question 1 contains a briefing note, and the question 1 briefing note has 4 marks. How you avail these 4 marks, let's keep that pending for Saturday once we conduct a debriefing session on the mock exams. Now coming to my main topic, which was the audit risk. Let's see if we can exercise the answer. See what is the examiner asking here. Evaluate the audit risk, and he's giving us 18 marks. Now obviously at the very first go, I'll divide these 18 with 2, and I know that I need to write on 9 risk. Now once I know my objective of writing the 9 risk, the question says evaluate the risk. Evaluate means that you have to give a conclusion at the end of the answer. So when you conclude your briefing note, that is right after the B requirement. So when you complete the B requirement and you conclude your briefing note, you will give a conclusion of audit risk, not of anything else, because it says evaluate the audit risk. And this evaluate requirement, whenever that comes in P7, you have to give a conclusion. That is how you demonstrate your professionalism with the use of verbs in P7. Okay, now we're very clear. We need to find 9 audit risk. Now, just to recap, risk can come from journal statements. Risk can come from accounting standards. Risk can come from financial statement extracts. And risk can come from any ratios given in the exam paper. Now, if you're better prepared for that, let's see how can we find these 9 risks from the given case study. I'll prefer one thing, that whenever you are attempting a question on audit risk, or whenever you're attempting a question on risk of material misstatement, or you're reading into the first question, you should be very particular about reading it top down. So whenever you're reading the first question, please ensure that you're reading the first question from top down, and your target is to find 9 risk. Now let's see, if I go about reading the question and I find 9 risk, let's see where I find my first 9 risk. The question starts, says, you are a manager in the audit department of Mondrian and Company, a firm of chartered certified accountant. You are responsible for the audit of Dali Company, a listed company. See, I found my first risk. A listed company. I found my risk number 1. I just told you in my session that a listed company is a journal statement, and a listed company has a risk. Management has an incentive to manipulate results to show a better picture. So see how much is the stress reliever in exam paper. Just in the second line, you got your first risk. It's a listed company. A listed company specializing in the design and manufacture of equipment and machinery used in the quarrying industry. You are planning the audit of the financial statement for the year ending 31st of December. The projected financial statement recognize revenue at 138 million, profit at 9.8 million, and the total assets at 90 million. Now, obviously, you know these numbers given in P7 has a specific purpose. Revenue 138 million, profit 9.8 million, total assets 90 million. They will all be used when you are determining the materiality. So you have to be very clear that these numbers would help you in determining the materiality. Then it says, Dali became listed in the home jurisdiction on the 1st of March and is hoping to achieve a listing on a stock exchange in 16. Now we have 2 risks. One is the company is already listed. That means the company has an incentive to show a better performance. And more importantly, company is hoping to achieve another listing. So in order to achieve another listing, they need to show better performance in order to get that listing done. So there is a greater risk here. First, it is a listed company, and secondly, it is hoping to achieve yet another listing. So let's see how can we write an answer for a listed company, and the company is hoping to achieve another listing. So that 2 here means we're working on an equation of 4 marks. So see how much important the first paragraph is. We had no accounting standards in the first paragraph, but the first paragraph is giving us 2 very important statements, helping us coming down with 4 marks. Now, before I read downwards the email, there is a query from Fahad Shabir. He's asking, can we get 18 marks for 12 risk or 9 risk are certain? Obvious, every risk is worth 2 marks, Fahad. So 18 marks has to be definitely divided with 2, and we need to write 9 risk. I think that is one of a major misconception, Fahad, that student tends to write a lot, and then writing a lot, you waste your time. You need to be very particular about the marking schemes, and the marking schemes are given towards the end of the answer papers. So please do read them carefully. 12 risk is a big waste of time in completing a 100% paper. There is another question coming from Mohammed Saad saying, amazing, but sir, would you please write 1 or 2 paragraphs? Mohammed Saad, I'm coming down with drafting. Just wait for 10 minutes. Let me first complete the case study. Then I'll show you the way of drafting the answer. Saima Mazur is asking a question. Will point 2 form part of the journal statement? Yes, the point 2 that the company is hoping to achieve another listing will also form part of the journal statement. There is another question coming from Muhammad Tahir Ansari again. Are business risk worth 2 marks as well? Yes, Tahir Ansari, business risk is worth 2 marks. Again, a lot of questions are now pouring in. Let me hold them for 10 minutes. I'll come back to it. Let me first complete the case study. Okay, if I move downwards and I start looking at the background of the company, if I look at the company background, Dali was established 20 years ago and has become known as a leading supplier of machinery used in the quarrying industry, with its customer operating quarries which extract stones used mainly for construction. Its customer base is located in the country of incorporation, but most of the components used in Dali company manufacturing process are imported from foreign suppliers. Now I'm getting my first accounting standard IAS 21. Now that means for me, this is my risk number 3. I already got 2 risks from top. Now that means I'm standing here at 6 marks, provided I draft the proper answer. Then you move further and it says, the machines and equipment made by Dali are mostly made to order in the company's 3 manufacturing sites. Customer approached Dali to design and develop a machine or a piece of equipment where management consider that design work will be significant. The customer is required to pay 30% in advance and the remaining 70% is to be paid on the delivery of the machine. Now obviously as per IFRS 15, 70% is paid on the delivery of machine means the risk and rewards have been fully transferred. The performance obligation has been met. So we can record the 70% revenue at the time of delivery. But this 30% revenue cannot be recorded and it should be treated as an unearned revenue. Else the revenue could be overstated. So I can find my risk number 4 here, which relates to IFRS 15. So that means I'm standing now at 8 marks. So my marks meter is going on. I need to accumulate 18 marks. And out of the 18 marks, I've already accumulated my 8 marks. Now you move downwards and you start reading from notes from the meeting with Dali Audit Committee. This year has been successful. Dali achieved a stock exchange listing. The company corporate governance was reviewed, resulting in recruitment of 3 new non-executive director. Now obviously that's my risk 5. That's a journal statement. New non-executive directors, obviously they would have less knowledge of the business. They will try taking some time to settle into the company, and within that time the monitoring of the controls would be weaker. The oversight of the controls would not be very stronger, and the financial statements could be misstated. It is a very journal statement, right? 3 new non-executive directors. They will take some time to settle in, and when they're taking some time to settle in, they will not be doing as good monitoring as they would be. And then it says a new finance director. So they have a new finance director. Again, the same problem. Every time you see this word new in P7, new means a lack of knowledge. He's a new finance director, so obviously must be competent. But a new finance director means that Again, he will take some time to settle in the company. And within that time, again, the oversight on the financial statement would be weaker. And a new finance director means that the financial statements could be materially misstated if the monitoring is weaker. I think that would classify the risk number 6. Now, with the 6th risk, you're standing at 12 marks out of your 18 marks. See how many journal statements have helped you here. The company is listed. The company is planning to obtain listing. Then you came down, you found 3 new non-executive directors, and you found a new finance director. So many journal statements, right? Then you had some accounting standards, IS 21, import from foreign suppliers. Then you have IFRS 15, 70% is paid on the delivery of the machine and 30% is received in advance. So 12 marks out of the 18, and we're still left with much of the case to be read after. Just holding for 5 minutes, reading some of the questions pouring into this topic. There has been some questions coming in, which is coming from Muhammad Hussain. He's saying, in an audit risk question, is it mandatory to quote a particular standard? No, not at all. That's flexible. You can quote or you cannot quote, but you need to write the proper treatment in the answer. I hope, Muhammad Hussain, I've answered your question. Then there is another question coming from Imad Malik. How many marks will be there for evaluation? Evaluation is part of the briefing note, consists of 1 mark. So when you write a conclusion at the end of the briefing note, that conclusion would give you 1 mark as part of the 4 professional marks. Then there is another question coming from Salahuddin. He's saying, do we have to just identify and explain the risk if the question is evaluate type? Yes, would not make any difference to the answer. Fahad Shabir, okay, I've answered that question on Fahad Shabir. Then downside, there is a question coming from Sabah Khan. She is asking, sir, how to determine what to capture in the answer when words used like determine, assess, identify, examine, just like you explained that for evaluation, conclusion in the end. Yes, in P7, though the verbs are not very crucial, but yes, if the examiner says assess, if the examiner says evaluate, I think both these verbs requires a conclusion. So every time the examiner says assess, every time the examiner says evaluate, you have to give a conclusion. The last question. Another question coming from Muhammad Kamran says, sir, I'm having problem with internet. Unfortunately, I can take the last session lectures on Vimeo. Okay, that is a technical query which will be sorted by the panel. Salahuddin is putting a question. Do we have to just identify, explain the risk if the question is to evaluate type? Yes, I've already answered that question. Again, holding the questions responses. It's very good to see you are pouring your questions in. That's just assures me that you are all into the live session and you are participating enthusiastically into this P7 webinar. That is so much comfortable on part of the tutor, seeing the students taking interest and responding in. I'll be looking forward for more queries, more suggestions, more feedbacks as the session unfolds. Okay, back to the question, right? So we got 12 marks, we got 6 risk. Let's see what's after that. Okay, then another point says, in March 2015, a cash-settled share-based payment plan was introduced for the senior executives. The amount of the bonus will be based on the share prices, so on and so forth. But the concerning point here is, as we discussed in the presentation, that says no accounting entries have been made. So we have a very particular risk. I think one of the students asked the question, I think that was Ifra Anjum, that should we write in a possibility tone? See, no accounting entries have been made. So over here, we are very sure that if no accounting entries have been made, then because it is a cash settled share-based payment plan, then that means the liabilities are understated and the expenses are understated. We have found the risk number 7. That means we have found our 14 marks here. Okay, one para down. The next one, the finance director recommends that the company's manufacturing site should be revalued. Now, we know revalued is such an important phenomenon in P7. Those of you who are repeating P7 must be having an idea that revaluation is one of the most repetitive accounting treatment which comes in P7. See what is the examiner telling us here. An external valuation was performed and there was a revaluation surplus of 3.5. So far everything is going fine. Has been recognized in equity. The finance director has informed the audit committee that no deferred tax needs to be provided in respect of the valuation as the property is part of the continuing operation and there is no plan for disposal. See, if I write here all about revaluation, I would be wrong because the question says that the finance director thinks there is no need of a deferred tax. Now I have to be very sure. I need to be very sure that when the company revalues the asset, there is a taxable temporary difference between the tax base of the asset and the carrying amount of the asset. And a deferred tax liability should be recognized. So the finance director is absolutely wrong. Again, we cannot write in a tone of a possibility. We need to write in a tone of being sure. No deferred tax has been provided. That means the deferred tax liability is understated. I'm standing at the risk 8, which is giving me 16 marks. So just one more risk and I can exit from the question. The next question, the next para, says, in July 15, a grant of $10 million was received as part of the government scheme to subsidize companies which operates in a deprived area. So we got a $10 million grant. Now, something which I just messed up on top as well. We can see this value, $10 million. So the moment you found this 10 million, you will work on the M materiality. You will judge how important $10 million is. On top, we found a $3.5 million number. So you need to find the M for $3.5 million as well. So wherever there are numbers, please ensure that the numbers are being converted to M and you determine the materiality. Now let's see what is happening with the grant. $2 million of the grant compensates the wages and salaries incurred in the year. So $2 million relates with the grant relates with the expense already incurred. So I can take this $2 million into my income because the expense has already been incurred. The remaining grant, which is $8 million, relates to the continued operation until 2020. So I cannot take the $8 million grant into my income because that relates with the operations by 2020. So I should defer the grant. What is the risk? The risk is I can take the whole $10 million into my income. That will overstate my income. So what should I be doing? I should be taking the $2 million into the income because that relates with the salaries already income. Or I can even set off them against my salary expense. But the $8 million grant is to be deferred out. I found my risk 9. And that's exactly where should I end in the exam paper if I follow a top-down approach. I found my 18 marks. See what I've done? I just exercise the journal statements. I just exercise the top-down approach. I just exercise every para. And within every para, I try finding the risk. And interestingly, I think just before the last para, I made up my 18 marks. Now, just to demonstrate more beyond 18, because this is a session to learn, if I go down and I see the last paragraph, though I have got my marks done, though I have taken in my marks, the last paragraph says the company's manufacturing site will be closed at the year end for the count to take place. It says there is a work in progress Just a minute. It says there is a work in progress, and the work in progress is valued at $12 billion, and the majorities of the order will not be completed. Now we know work in progress is the risk 10, because work in progress is something very subjective by nature. The work in progress is something very inherent risk, because there is a lot of estimation in work in progress, right? And the work in progress could be overstated. It has increased a lot from 9.5 to 12 million. I'll find the materiality of 12 million. Then obviously, in terms of the treatment, I would be very particular about the subjectivity involved in estimation of the work in progress. And I'll be concluding that there is a possibility that the work in progress could be overstated. So that means I'm here standing at my 20 marks. The last line says, DALI offers a warranty to customers. So I need to recognize a warranty provision. So the company offers a warranty to customers. So I need to recognize a warranty because I have a obligation. I have a constructive obligation, and I need to record a provision. And if the provision is not recorded, then the liability will be understated. I think provisions will give me my risk number 11, and I'll take my score up to 22 marks. Now, the last thing, which I just told you, that when you are working on audit risk question or a risk of material misstatement question, you need to look at the numbers. There are not much numbers here, but the examiner has given you the results here. Inventory days. See, inventory days have increased, and that's every time in P7. If the inventory days have increased, that means there is a risk of slow-moving inventory because the inventory days have gone up. And if the inventory days have gone up, that means there could be a risk associated with inventory valuation. Inventory could be wrongly valued, something like that, because the inventory seems to be slow-moving here. I can find my risk number 12 with inventory days. Receivable days have increased. That's again so natural with P7 paper. The receivable days have gone up. That means there is a need for bad debts. And again, if the bad debts are not recorded, then the receivables could be overstated. I found my risk number 13 from here. Numbers, see how much numbers are helping here. So I think it's proving, as I conducted a session with you, that numbers, journal statements, accounting treatment, I think with that 13th risk, and I cut short that, I'm standing at 26 marks. How much marks I need? Just 18. So please assure that when you're reading a question on audit risk, read it sensefully, read it top down, read every para. You will find something. Either you will find a journal statement, or you will find an accounting risk, or you will find an accounting treatment, or you will find numbers, but they all play a crucial part in your 18 marks answer. Now, how to write it? Because that's very important. If you do not know how to write it down, even though you know how to identify it, you will still struggle. You will still struggle to pass the paper. So you have to be very critical of how to write it down. Now, to support the writing practice, I have already shared with the attendees, the participants of webinar, my own written answers, which are time management answers, which are not as long as the examiner answers. And that answer would really help you identify how much you need to write within the stipulated time. Remember, this is a 35 marks question, which should ideally finish in 70 minutes. We are attempting a requirement for 18 marks. 18 marks means we should write in like 35 minutes. So how much we can write in 35 minutes is exactly what my answer is. I think you cannot keep looking at the examiner answers and keep getting stressed. Oh, this is how much I have to write. This is how much I have to write, because that's something you will be looking at again and again, and you will not find the solution. That is a tutorial guidance. Examiner answers are really good. You really should read them, but you should not really read them for the length of the answer, because that's something which would not be good enough for exam paper. Okay, now just before starting on with the answer, how to write the answer, let's respond to some of the questions. I think there is a question coming in from Imran Riaz, he's asking, sir, listed company risk is not the same just like above risk. Yes, there are two types of risk associated with a listed company here. One is a journal listed company risk, that it is a listed company. And then secondly, the company has a plan to list further. So I think the chances of massaging the figures is like significant here, just because they are listed and they want to go for listing. Yes, they can be broken down into 2 points and they can be taken to like a 4-mark context. Then there is another question coming from Ifra Anjum. She says, if we do not have time for conclusion, then how much marks will be deducted? 1 mark, very specifically. Salahuddin is asking, yes, we are fortunate. We are getting this session. We are getting a live session. Thanks. Thank you so much, Salahuddin, for the appreciation. Talha Shahid is saying, sir, you split the director point into 2 different risks. Isn't it one to explain? No, Talha, exactly. There are 2 different directors, the non-executive directors and the finance director. The finance director has a different role and has a different risk. The non-executive directors has a different role and has a different risk. So the NEDs looks after the monitoring of the systems, the controls and every such things in journal, whereas the finance director is more confined to the oversight of the financial statements. So I think they are 2 risks, not 1. Homa Tariq is asking, do we need to go through all accounting standards thoroughly for P7? Homa Tariq, I just mentioned that at the beginning of the webinar, that if you email me, the email ID would be shared with you at the end of the session. I'll share with you my summaries of accounting standards. I think that's much enough for preparing for March 18 exams. Amina Osman is asking a question, sir, can we calculate materiality to assets and also to revenue, or one of them is enough? If it is a balance sheet item, Amina, then you can determine materiality on just the balance sheet. You can determine the materiality on the total assets to save time. And if it is an income statement item, then you can work on the revenue or the profit. But one of them is fine to save time in exam paper and exit from it. Another question from Salahuddin is saying, do you have past papers which are solved by you? Yes, Salahuddin, if you need any of my solutions, which I've done in my regular classes to P7, I'll be more than I'll welcome that. I can share that with you. I have no issues with that, as much as I can help the students passing the P7 paper. Another question from Bilal Qureshi, is there any risk with payable days? Yes, payable days increasing just minorly from 55 to 60 might demonstrate that you're slowing down on your payment, might give an initial symptoms of liquidity problems, but not beyond that. Another question is coming from Ujala Khaled. She says, can we write more than 18 risk just on to be the safe side, or only the first 18? Yes, I hope you're asking 18 marks, not 18 risks, Ujala Khaled. Yes, you need to write 9 risks for 18 marks. You can write it in any order, but my preference is that you go with the top-down approach. If you cannot stick to the top-down approach, you need to find 9 risks across the case study. Again, a lot of questions are coming in. There is a long list of questions coming from Sadia, Juma, Kasser, Fayaz, Ifra Anjum, being a very regular enthusiastic attendee. Zishan Ali Abasi is putting questions. Sumaya Hassan is putting a question too. Again, I'll come back to questions in next half an hour. I hope the questions I've answered, you got a satisfactory response, and good to see your enthusiasm through this question and answer session. And it's good to see your questions too, and good to see you that you're preparing yourself for March 18 exams for P7. Okay, I'm moving back to the answer, and I'll come back to you, your question panel in next half an hour. Okay, now towards the answers of the risk we just found. Now the handouts which have been shared with you, for this session contains the answer of the questions we are going through. You can see the answer of the question December 15 on the page 7 of the handout you have. Let's see how to go about it. Now, how you write a briefing note, how you start writing a briefing note, again, that is something which I will be addressing specifically on a debriefing day on Saturday. But I hope you know that the briefing note is to be structured in to, from, RE, and you start writing a briefing note with an introduction. And after the introduction, you come down with the first heading, which is to write the audit risk. Most of the time, I've seen students that when they write in the RE in a briefing note, that is to, from, RE, the RE is basically the subject which the partner has put into the email. Now, if you've ever replied to an email, the subject line never changes. So the subject line which has been given in the question paper, the same subject line would come in the RE. You cannot change the subject line as per your own, on your own assumptions. So the RE would be the same subject line as given in the email which has come from the partner. Then you write the introduction. Introduction is basically what you have to do in the briefing note. The introduction is basically the exam requirements, and you tend to summarize the exam requirements in terms of writing the briefing note. Again, I'll illustrate that better once I come to the debriefing of the mock exam on Saturday. Okay, we were writing the audit risk. I have just discussed the audit risk with you. Let's see how to tone them down. And see my drafting style. I've given a heading like recent listing, management bias, and under the heading I'm writing the recent listing and a planned listing ahead creates a risk of management bias in manipulating results to show better performance. Thus, Dali management could overstate assets, profits, and understate liabilities and expense. Now, I'm telling examiner that the company is listed and is planning to be listed. That creates a risk of management bias. The management could have an incentive. I'm also saying to the examiner, there is a risk that the assets could be overstated, the liabilities could be understated. Then to make an impression, see what am I doing? Then to make an impression, see what am I doing? Revenue has increased by 2% and profit by 6% indicate such might exist. See how good that line is? That shows that I have seen the numbers in the past paper. I've seen the numbers in the first question. I'm telling examiner that the revenue has increased by 2% the last year. The profit has increased by 6% from the last year. That means the management might have manipulated profit. The management might have manipulated revenue. The increase shows they can be overstated. So writing lines like such is a plus. But see the length of my answer? And again, that justifies a lot of queries coming from students. How much to write for 1 mark? How much to write for 2 marks? I'm writing this for 2 marks. See, my answer is very unambiguous. My answer is not ambiguous. It's very clear. You can keep reading these answers. These answers have been provided to you. See, my answer goes in a very structured form. Recent listing. Further applicable standards. You need to be assured that when a company is listed or when the company is going on for listing, they need to apply some more additional standards like IAS 33 and IFRS 8. They do not apply to a non-listed company. So the management could be unaware of IFRS 8. The management could be unaware of IAS 33 because they recently got a listing. So being recently listed, there could be a risk of IAS 33 and IFRS 8. The management might not have an idea of that, which could result into incomplete or inadequate disclosures. So please do read this answer. See, my paragraphs is almost been of the same length and very specific. You can scroll down my answer. You can see my answer, how the answer has been properly written and has been properly structured. See, payment in advance, new finance director, all of these points have been well elaborated. See my point of deferred text recognition. I told you wherever the number is being given, you need to write the M. See, I'm writing the M. The revaluation surplus of 3.5 million is 3.9% of the total assets. Thus, it is material to the statement of financial position. See, I wrote M. I could not have written this M anywhere in my answer above because there were no numbers. I could have written M where I can find the number. And that is the first time I found a number $3.5 million. So I can write on it. So $3.5 million is like 3.9%. And then I write after. Please do read my treatment here. See, my treatment is very much concise and my treatment is very much to the case. I'm not writing any journal treatment. And again, for students who are saying, should I refer to the standard? See, I'm not writing as per IAS 12. I'm writing the treatment, but I'm not saying IAS 12. So it's very flexible. You need to do it the way you like it. The government grant. See again, the government grant, $10 million is 11.1% of the total assets and is thus material. See, I'm starting with the M. Again, I had the number. See, I'm not referring to IAS 20, but I'm writing the treatment of IAS 20 very clearly. And I'm telling examiner what should be done with $2 million and what should be done with $8 million. And see, I've written a line here, 18 marks ends here. This line has been given for students that this is how much you need to write for 18 marks. But the answer continues because this is again a guidance for student. How can you write the rest of the points? Please go over my draftings. These are exam efficient draftings. These are draftings which will really help you writing an exam standard answer, and more importantly, would help you complete 100 marks paper, which is utmost important. I'll prefer that over the day today and day tomorrow, you are reading my answers, you are going over my answers, you're creating a sense of writing, how you should be writing the proper answer for audit risk or the risk of material misstatements. Okay, I'll be looking for your feedbacks on audit risk and ROMM. I'll prefer that this handout, which is right in front of your screen, contains another question on ROMM. There are questions for your home assignments, which contains audit risk. But I'll prefer that when you sit down and study for audit risk, try finding risk first. Make a mind map. Make a mind map which illustrates how you find risks, and then go ahead of that. Just right. So if for example, if you are attempting a question, on audit risk, look at the case or ROMM, right? First, look at the case and see how much marks are there. Now, once you know marks, see how many to write. Now, once you know how many to write, because you need to divide them by 2, then go top down. Start finding risk from top down. And then remember that the risk can come from any journal statement and you can accumulate your marks. The risk can come from accounting treatment and you can accumulate your marks. The risk can come from financial statement extracts and you can accumulate your marks. And at the end of the day, write a conclusion. I'll tell you how to write it down, or you can see it in my answer, but I'll tell you how to write it down on the last day, Saturday, when we get down with mock debriefing. But I hope you will involve yourself in an audit risk case. It's not difficult, right? You need to prepare yourself for accounting treatments. I'll share the summaries of this with you on the WhatsApp group or over the emails. You can prepare yourself here. Journal treatments, I think they're so repetitive. They're so repetitive, you can even go down with rote learning of them. Financial statement extracts, you need to be clever. You need to see how you can use numbers. Then how much to write, you should take it by 2, and a top-down approach. I hope this mind mapping could help you out involving and bringing better results to P7, bringing better results to question number 1. Okay, I'm just holding for 5 minutes now, taking on the business risk approach towards the last 1 hour of the session. But just before starting off with the business risk, I'll be taking 5 minutes responding to the students' questions, which are now pouring in, before I change my topic and start with business risk. Okay, let's see where to pick questions from. Farooq Maqsood is putting a comment, excellent speaking. Thank you so much for that appreciation, for Farooq Maqsood. Another comment's coming from a student saying, sir, is there a break? We have prayers. Unfortunately, I cannot give you a break at this point in time. There might be some time distortions. You need to cope up with that, or you can then get the benefit of the lecture on Vimeo. There is another question coming from Sadia Juma. She says, what would be your advice due to short time left? Should I focus more on practicing questions or on the notes? Sadia, I would prefer that these webinar slides is enough. Go over them, try learning the techniques, and practice more in the time left. Involve yourself in the past papers and more recent past papers. Best of luck for your exam, Sadia. There is another question coming from Arif Ali. Sir, kindly upload accounting standards. Yes, I'll be uploading the accounting standards. You will be getting an email of accounting standards if you email me at kashifkamran@gmail.com. Muhammad Tariq Shabi, but is the change in revenue or profit significant to quantify as risk? Yes, obviously, we are not sure. Even a 6% rise in profit can be due to overstatement. It could be that the actual rise of profit is 2%, and the management has shown it like 6%. So you have to take it as risk. Okay, Neelam Shahzadi is putting a question. In determining materiality, we should prefer the total assets, revenue, profit. Neelam, it depends upon the item. If it is a balance sheet item, then prefer the total asset. If it is an income statement item, then prefer profit over revenue. And if only revenue is given, then for an income statement item, prefer using revenue then. There is a question coming from Muhammad Abadi. Thanks, sir. It's clear. Again, thanks for appreciation. There's a question coming from Ko. He's saying that materiality is written in deferred tax, government grant. M seems to be supporting these points. Does M carries 2 marks? No, M does not carry 2 marks. M carries just 0.5 marks. When you determine the M and you comment on the M, it carries just half a mark. The 2 marks is for the whole paragraph. Sabah Khan, sir, if the financial statements was also given in the question, how would we incorporate that in our answer? If the financial statements is given, then you need to make use of the analytical procedures, but try convert the financial statements into comparisons, into ratios, and see can the ratios bring some risk for you, or the comparison can bring some risk for you. There is another question coming from Saima Mazza. Unable to open the session question and answers the PDF link. I hope that will be solved by the technical panel. Sakina Dar, send accounting standards summaries. Okay, that will be sent to you, but you cannot share your email ID. Please email me at kashifkamran@gmail.com, Sakina Dar. There is another question coming from Augustine. Please share the current screen. Okay, I'll just share in the current screen. Sir, please do tell me how to relate EPS to audit risk. Ifra Anjum, EPS has come in June 15 exams. Question number 1. In that question, the EPS was wrongly calculated. So if the EPS is wrongly calculated, it's all about presentation. The earning per share could be wrongly calculated. The financial statements could be materially misstated. For earning per share, we cannot say under and overstatement. But for earning per share, we can say the financials statement could be materially misstated. Ifra, do look at the June 15 question number 1. You can get a better idea of the earning per share linking to audit risk. Okay, a lot of questions coming in. Very good approach, sir. I appreciate that. Mohammed Bakas, thank you so much for that. A lot of other questions coming in. Can we use abbreviations like MGT, financial statements, research and development? Salahuddin, you need to use the full form once, then you can use the abbreviation. Yes, you are free to use abbreviations. Then questions coming from Zishan saying, sir, I missed the answer discussion due to some technical issues. Okay, you can catch on the Vimeo once the session gets uploaded on Vimeo the next day. Saima Mazhar, I was able to open all the 3 links, but not this one. Again, Saima, you need to cope up with that. Question coming from Imran Riaz, Ali Ahmed Siddiqui. There's Ifra, thank you, sir. Make things so easy. Thank you for appreciations. Thank you for posting queries. I need to move to business risk with those volume of questions coming from students. But again, that shows your enthusiasm you have in this webinar. And I really like the way you are corresponding with me, putting these questions. And I hope I've satisfied you with my responses. Again, the WhatsApp group is open. You can post your questions after the session gets over. I'll be responding to that as well. But within the limitation of time, just need to focus on the business risk for the next 45 minutes. And I see if I can interact on more of the questions in the last 10 minutes of the session. Okay. Wish you best of luck, the students putting questions, all the students on this webinar. I hope you prepare effectively for March 18 exams. Let's go back to start of the business risk. Okay, the business risk. Now, as mentioned earlier, if you are planning for March 18 exams, the likelihood of a business risk is very dim. I just mentioned that business risk comes after a substantially long time. It has come in December 2012. It has come in December 2014. Then it came back into 2017 September. So you can realize yourself, it comes after a very long break. So is there any chance of a business risk coming? Bluntly, no. But should you be preparing for it? Yes, as your second priority. Examiner is very much comfortable with students answering a business risk. And that's been a key reason why examiner test business risk so lesser. What you should be doing for business risk, what you should be doing attempting a business risk answer. Just like audit risk, ROMM, where I had made an approach. Let's see, is there an approach for business risk like such? First of all, when you're attempting a business risk question, forget that you are an auditor. Rather think you are a director, because you need to believe you are a director to able to produce an answer which demonstrates business risk. You cannot bring accounting treatment to business risk. You cannot bring understatements and overstatements to business risk. You cannot think like an auditor when you are into a business risk. Rather, you need to think about as if you're a director, you're running a company, and your business is facing a lot of risk. We know business faces risk, right? And those of you who have attempted the P3 paper, the business analysis, you know the risk comes from external environment, the risk comes from internal environment. There can be a lot of weaknesses which turns to risk. There can be a lot of threats which turns to risk later. So business risk is more about a director mindset, even though we are attempting a question from the auditor mindset. But if you start thinking yourself as an auditor and you attempt a business risk, then the problem is you might mix business risk with ROMM. You might mix business risk with audit risk. Now, having said that, in all the three instances, when business risk has come in the past paper, business risk has come together with the risk of material misstatement. So examiner has never put a separate question on business risk. Rather, examiner puts a question on business risk alongside risk of material misstatement. So does that mean there is a correlation between business risk and risk of material misstatement? Or is there something like a business risk results into a risk of material misstatement? Because examiner never puts a business risk question alone. Examiner puts a business risk question with the risk of material misstatement. So let's find, is there a correlation? If I read the second bullet, which says business risk is broader than the risk of material misstatement, though it includes the latter. Business risk is broader than the risk of material misstatement, though it includes the latter. What does that mean? Business risk is all about when the auditor takes knowledge of business. When the auditor takes knowledge of business, he takes knowledge about business strengths, weaknesses, opportunities, threat. When the auditor takes knowledge about the business, he takes knowledge about the industry, he takes knowledge about the political environment, the economic environment, the social environment, and how all they impact and how all these impact the business. Now, business risk relates to the knowledge of business. An auditor spends so much time taking knowledge of the business before he starts the audit, right at the planning stage. So business risk is broader than risk of material misstatement, though it includes the latter. So let's find how business risk is broader through an example. To successfully identify risk of material misstatement, the auditor should use a business risk approach. A simple example is that a company may face a business risk such as a fall in demand for its product. Obvious, if the company is facing a fall in demand for its product, that is something very worrying for a director. And the director would believe that the demand for my product is going down. That means the risk is that my business is losing the competitive advantage. If the demand for my product is going down, that means my sales are going down. If the demand for my product is going down, that means the customer is not liking my product. See, I have not said under an overstatement, but I'm thinking like a director. Okay, if I'm a director of a company and my product demands are going down, I will be really worried about my competitive position. I'll be really worried about my competitor taking an edge on me. I'll be really worried about my sales and profits going down. Or I'll really be worried about my products becoming obsolete. But a fall in demand obviously is a business risk. But can a fall in demand be linked to a risk of material misstatement? The associated risk of material misstatement lies in the valuation of inventory, therefore the risk of misstatement at the assertion level. However, the fall in demand could have a longer-term impact on the company's going concern, leading to a potential risk of misstatement at a financial statement level. Obviously, a fall in demand for a director is a worrying point, but a fall in demand for an auditor too is a worrying point, because a fall in demand means that the products are becoming obsolete. And if the product is becoming obsolete, the auditor needs to think about the material misstatement in the context of IAS 2. And he needs to think about the valuation of the inventory. The inventory is at risk, the valuation is at risk, and the inventory could be overstated. So, for example, I think that was in the December 12th paper. The raw material is imported. Now, obviously, if the business imports raw material and I have to find a business risk, import of raw material means import is costly. Import of raw material can have a lot of barriers. The country from which I am importing can have a trade restriction with me. the oil prices can go up, and that can make the cost of import very heavy, cost of import very costly, and my profitability can go down. See, I'm thinking like a director. But if I am an auditor and I say company imports raw material, what will I think? I'll only think about IS 21, and I say IS 21, the raw material is imported. That means I need to think about the spot rate and the closing rates. But see, what was the director thinking? The director was only thinking about raw material is imported. What if the oil prices goes up? Raw material is imported. What about there is a weather condition which affects the trade traffic? And I can be in a stock out problem. I can be in a stock out problem if I'm importing a raw material. So the tone of writing a business risk is very different from the tone of writing an ROMM, because in an ROMM, we are more obsessed into the accounting treatments. We are more obsessed thinking like an auditor. But in a business risk, we are a director. We are thinking about how the risk impacts the business, how the risk impacts the business. Okay, now just moving ahead of that and just coming closer to a question, just need to focus on some more questions. Let's see if there is any question moving around business risk here. Kamran Nazir is putting a question saying, should we answer business risk questions like we do in P3? Yes, you can do so, because you're not thinking about any accounting treatment. So your tone of answer could be more like a P3 business analysis. Perfect with that, Kamran Nazir. And perfect if you go with that approach. Again, a lot of comments coming from other students. I think most of the comments are about the technical issues on WhatsApp group, technical issues on emails. I think that will be sorted out within a day or two within the session end today, and hopefully things will be active. Sir, inherent control detection risk individually. Okay, Osama Sabir, I just couldn't get what you're asking. Can you just rephrase your question and try to put that into a proper English sentence or English structure rather than using the inappropriate form of typing your question? So I expect the question coming from you again, Osama Sabir. Put it in proper English would help you a lot with drafting the P7 paper as well, rather than putting your answer more into the inappropriate way of typing. Can we apply IAS in business risk? Usman Jelani, no relevance of IAS with business risk. Business risk is just thinking about directors, no accounting standards, no accounting links, so on and so forth. Headings are necessary for each para. Rafiq Khan, yes, headings is just a presentational issue. Headings makes answer looks better. And I think use of headings in a P7 paper is highly encourageable. Your answer starts looking better. Okay, one last question moving towards business risk. Farooq Maqsood is putting a question. Sir, could you please explain a bit again about relationship between business risk and ROMM? Farooq, yes, there is a relationship between business risk and ROMM, because it's just flipping the side of the picture. Raw material is imported. If I see that as a director and raw material is imported, if I see that as an auditor, will make a big difference. If I'm a director and I see that I import raw material, imagine the director would not be worried about that the business imports raw material and import is costly. I can have an issue of a stock out with import. I can have an issue of the oil prices going up and affecting my profitability. Whereas when I think like an auditor, raw material is imported, I'll think about IS 21, the spot rate, the closing rate, etc. This is just the psyche, the change. You need to bring a paradigm change from director to auditor. Thinking like a director, thinking like an auditor. Thinking like a director is about business. Thinking like an auditor is like IAS. Okay, let's do one quick exercise on business risk and then take an exam paper. Okay, now what exactly I would like to discuss with you now. Let me see if I can make myself more clear on business risk, because I'm just winding it up, moving towards the exercise on business risk. Now, when you're attempting a question on business risk in an exam paper, again, not very important, but still you need to focus on it as a second priority. Business risk, first of all, think from the mindset of a director. Second, in a case when you're finding a business risk, each business risk is worth 2 marks, just like audit risk. Thirdly, business risk, when you're finding a business risk, first of all, identify the risk from the case, then elaborate. Elaborate means think, why is it a risk? Justify. But why you believe that the statement you took out from a case study is a risk. Try explaining that to your assessor, that I believe this is a business risk for what reason. Now, when you are elaborating, you need to be clear about its. Remember, no risk can be without impact. No risk can be without impact. Whether you're attempting a question on audit risk, or you are attempting a question on ROMM, or you are attempting a question on business risk, you cannot end your answer without writing the risk, without writing the impact. Now, business risk is broader than the risk of material misstatement. So the impact of the business risk is the impact on the business. The impact of the audit risk, or the impact of the risk of material misstatement, is on the financial statement. That is much narrow. The impact of the business risk is the impact on the business. So the impact here is much wider, and the impact here is much more diversified. Now, what can be some examples? Okay, so the impact of the business risk is the impact on the business. Now, when you think about the impact of the business, the impact could be the impact on the business profitability. Obviously, one of the key things the business is concerned about is the profitability. So business would be very much concerned about anything impacting the profitability, anything impacting the sales, anything impacting the market share, anything which is impacting the stakeholder relationship. You think there is something in the case study which can affect the relationship with stakeholders? There is something in the case study which can affect the relationship with stakeholder, like your customers, your suppliers. So anything which impacts the stakeholder relationship, or anything which impacts the market share, the sales, the profitability, anything which brings an impact on shareholder, anything which brings an impact on the reputation of the company. If I just sum up, you must have heard this term known as critical success factors. So anything which brings an impact on the critical success factor of the business is basically a business risk. So the impact can be on the critical success factor. So that's just a summary of the business risk before we start on with the past papers, so that you have a better idea. We are just left with under half an hour for the session to wind up. I'm taking a 5 minutes break. Just revise the mind map you have in front of you on business risk, and post 5 minutes break, I'll start directly with an exam paper on business risk so that you can understand the application. And please keep posting your queries over the session. Your feedbacks is highly encouraging. Your suggestions and your queries to the topic. Okay, a 5 minutes break. We are resuming after 5 minutes.
Okay, welcome back. After this 5 minutes break, we were working on business risk, and I hope this mind map must have helped you to understand the broader perspective of business risk and its understanding. Let's take a quick view of the past paper, which can help us to identify the business risk. Now, the very first question in your handout on the first page, which is December 14, if I just move downwards into this exam paper and just focus on what was required of this paper, see this question. This question requires evaluate the business risk. 11. Again, I divided by 2. The marks are odd. 11 marks is an odd number. 11 marks is an odd number. So I divided by 2. So I'll write 6 business risk for an 11 marks question. But it says evaluate. So again, I just told you that evaluate means to give a conclusion. But that conclusion will come at the end of the briefing note, just like the Dali company question. End of the briefing note, when you are preparing this briefing note for the examiner. And obviously that evaluation will have a 1 mark, but that will be included in the briefing note answer. So you need to find in 6 business risk. And that was exactly my point, that with the 6 business risk, you need to identify 4 risk of material misstatements. That is another 8 marks divided by 2. So obviously you know how to find risk of material misstatement as per the earlier exercise, but that is how the question comes on business risk. In the first part, you have business risk, and in the second part, then you have the risk of material misstatements. Now if we move back, let's see if we can find the 6 business risks. Top down. Okay, let's start reading. You are an audit manager in Davies, responsible for the audit of Cannoli, a listed company operating in a pharmaceutical company. See, a listed company. A listed company can be both ROMM. We just had a word on that. It can be a business risk. A listed company has a risk of compliance. If you are a director of a listed company, you will be very much worried about compliance risk. You will be very much worried about any fines and penalties coming on your business, which can impair your reputation, which can dampen your reputation. So being a listed company, you have a risk of compliance. You have a risk of compliance with being a listed company. Again, my standard answers associated with this handout would guide you how to write in the impact. But a listed company, you can think about an auditor. A listed company, you can think like a director and thinking about the compliance perspective and how compliance affects the business. Okay, moving downwards from that listed company, which can come both ways as an ROMM and as a business risk. The background information. Cannoli is a pharmaceutical company developing drugs to be licensed. Product includes medicines such as tablets, medicines, medical gels. Some drugs are sold over the counter, while others are prescribed by the doctor. Products are heavily advertised to support the brand name. Obviously, it's good to heavily advertise the product, but it's good to heavily advertise the product only when you get benefit. You are heavily advertising. That means a lot of expense. But are you getting any benefit against this expense? Let's go and find that on the page 2. When I go to the page 2 and I see the benefit, when I see the benefit, the revenue has just merely increased by like 5%. That's not much, considering heavy advertised. Examiner is deliberately using that word heavy advertise. So
You need to link the heavy advertised with a 5% increase, which is not much. That means the company is not gaining any particular advantage of this heavy advertisement. And the good thing is their operating profit margin has gone down. So for a shareholder perspective, it's not good. The shareholder would not be happy that you're incurring such a big cost, such a heavy cost. And against that, you're getting nothing. So 20%. So I hope we're not getting any benefit of that heavy advertisement. Yes, sales are increasing, but sales are not increasing at the pace at which they should be increasing. So heavily advertised becomes another problem. Okay, moving further, in some countries, television advertisement is not allowed. Television advertisement is not allowed in some countries. There is another compliance risk. There is a risk that mistakenly the company runs an advertisement in those countries where the television advertisement is not allowed, and the company would be penalized for that. The company might face a compliance risk. So television advertisement is not allowed in some countries. So that means we have another compliance problem. Remember, one of the major business risk is a compliance risk. So being a listed company, this is a compliance problem. Television advertisement is not allowed is another compliance problem. I was just looking at a question coming from Ghulam Qadir Chandio. Sir, listing is not to journalized points to gain any points. Ghulam Qadir Chandio, there is nothing journalized in P7. If that is in the case, it's in the case. So any case specific point cannot be treated as a journalized point. So whatever is in the case, you need to convert that to risk. So the examiner is telling us in the case that the company is listed. So we cannot consider that as a journalized point. It is a very specific point to the case study. I hope I've answered you, Ghulam Qadir Chandio. Okay, back to this. Then it says the market is very competitive. Now, if you've done your P3 paper, the market is very competitive means this is another business risk. Being a competitive market, that means there might be a lot of companies competing with you. There is a lot of pressure on your sales. You've already seen the sales have gone by 5% up. That's not a lot. That shows the market is competitive. So being a competitive market means that you need to be on toes. You have a pressure. One slight mistake can spoil your market share. One slight mistake can give your competitor a better advantage. Then just moving down, I think if I just keep recapping, license, we have so far found a listed company, a heavily advertised, television is not allowed, a market is very competitive. We got 4 out of the 6. Then it says, drugs have to meet very stringent regulatory requirements prior to being licensed. Now, what if the company does not meet the stringent regulatory requirements? Another compliance risk? See, thrice in the same question. Being a listed company, compliance. Television advertisement is not allowed is compliance. Stringent regulatory requirements is a compliance problem. But that is a very, very important problem. Stringent regulatory requirements prior to being licensed. See how big that risk is? What if you fail to meet the regulatory requirements? What will happen at the end of the day? If you fail to meet the regulatory requirements, you will not get the license. If you don't get the license, you cannot produce, you cannot sell, you will lose your competitive advantage. See how important that point is? So think like a director. See, if you are running Canoli company, and if you're running a Canoli company, how will these impact you as being a director? Okay, one last business risk. It is common in the industry for patents to be acquired and patent rights are rigorously defended, sometimes resulting in legal actions. If a legal action comes against the company, the legal actions can spoil your reputation. The legal action can bring you in a media spotlight, and the media spotlight can affect your reputation. So, 6th risk, sense how you pick them. You were like a director of Canoli, and you found many examples of compliance. You found many examples of regulatory compliance. You found the company was heavily advertising, but they were not getting any benefit against that. And more importantly, the reputational risk. See, in all those 6 risks, I didn't speak of an IAS. I didn't speak of an accounting standard. I didn't speak of the under and over statements. So you need to think like a director. You need to think about how these points impact your business, how these impact the cannoli business. So again, top down, right? If I'm going top down, I found my 6 business risk. But we see the drafting which is within the notes, to see how you draft a business risk, how you write a business risk answer, how you tone the business risk answer. You can see these answers on business risk coming on page number 5. Have a better look at them over the day today and tomorrow. See how you're drafting, writing the business risk answer, because again, the drafting plays the crucial part in your success and failure. Okay, now obviously the agenda for this first day of webinar was to get on to risk, the question number 1, and to focus on audit risk, ROMM, and business risk, and to be very clear on their concept buildings and to be clear on how to write them down. These handouts have the drafting. You can ask for more drafting from me on WhatsApp and email, which I can share with you. But please ensure that drafting is the key part of your success on this topic. Now, just into the winding up of this session, I still have another 8 minutes. I got some queries and I need to have a proper closure of that. I got a query on audit procedures. Audit procedure is on day 3, so don't worry about that. We come across audit procedures and how to write them on day 3. There was a student, Osama, who asked, why in DALI I didn't classify risk into inherent risk, controlled risk, and detection risk. Obviously, that's a very immature approach when you are a manager, that you classify the risk. Classification is not the professional level exams. Classification is not a manager, right? Classification, when you're writing to your partner, you will not tell your partner that this is inherent risk, this is controlled risk. Obviously, the question is on audit risk. The question is on ROMM. So you cannot classify the risk. Seems very childish. Seems as if you are a junior, you're not a manager. So I hope I've answered your question, Osama Sabir. There was a question from Qasim Abdul Rashid about crash classes. Yes, I'll be conducting the physical crash classes at TSA. You can contact the Tabani School of Accountancy for the schedule. There was another question about whether I should go with the first or the second section first. I think I'll better solve this query over the days coming ahead, because this is a very journal query. Okay, finally, having a final look at the queries coming in. Okay, there was a query from Muhammad Ali. Can you share your email ID? That's a technical query. There is a feedback coming from Neelam Shahzadi saying crystal clear concepts have been delivered by Mr. Kashif. Thank you both ACCA and him. Thank you so much, Neelam Shahzadi, for the appreciation. There is a query coming from Farwa Batul. She says, we may relate research and development with the deficit net cash flows under the BR. Yes, Farwa, that's right. The negative cash flows is a business risk. And the reason for that is the amount you have spent on the research and development. Then there is another query coming in, attempting question section B or not. Bilal Qureshi, I'll be handling that query towards the next few days. I have taken your query in my mindset. Then there is a query coming from Jahangir Shiraz. Sir, time difficult to go with the 2 requirement answers. We have to read again it for ROMM. No, Jahangir, when you're reading a question for business risk, you're reading it for ROMM as well. And you should have a capability of converting the business risk to ROMM. See my answers for that. And so on and so forth. So there had been many questions. I hope I've solved most of them. But if any query is pending, I've noted them down. I'll be solving them over the day coming ahead from Tuesday to Saturday. It was good to see your enthusiasm. It was good to see your enthusiasm across the session. It was good to see your questions pouring in throughout the session. It was very active attendee list where most of the students were asking good questions, particular questions, and that is a good enthusiasm. Really appreciate your participation into this webinar, and I hope you must have learned concepts on audit risk, risk of material misstatement, and business risk. I'll really appreciate your feedback over the WhatsApp group and over the chat window that how you like the session today. I would like you to rate the session today. We'll be working on many more core areas starting from tomorrow, but please ensure that the resources that have been shared with you for the day one, which was risk, you revise them thoroughly, you revise them properly, and do practice, because again, that's the key thing. And I'll be waiting for your feedbacks about the session, whether you liked it, there is something which can be improved in, how you rate the session from being excellent to good or to being fair. We'll be assembling tomorrow the same time, 6 to 9 p.m. Pakistan Standard Time. The agenda for tomorrow is ethical and professional issues. If you want to prepare yourself for that for tomorrow, but I would prefer that over the next 24 hours, you're planning yourself on what you learned today and what you got today, and focus on practice. And I'll be into helping you as much as possible over the WhatsApp group and the email. I hope you like the session today. I hope you benefited from the session today. I hope you had a good understanding of the audit risk. You had a good understanding of the business risk. You had a good understanding of the risk of material misstatement. I welcome your responses for any handouts, any material you need extra beyond the webinar. I'll be sharing that with you as well. Just one thought process. I hope all of you are within the ability to correspond with me. My email ID, once again writing that down very clearly, my email ID is Kashif Kamran @gmail.com. And if anyone is still facing problems with the WhatsApp group, my WhatsApp number is 92, that's the Pakistan code, 333 238 3442. So you can reach me over the WhatsApp for your queries. You can reach me over the email. And obviously, I am a very friendlier Facebook person. So you can approach me on my Facebook page as well for any queries. And my Facebook page, you can search me through Kashif Kamran on the Facebook. So you can use any medium, right? You want to put in your questions. There are many questions unaddressed. I'll be solving them over the day tomorrow and day after tomorrow. I've noted your questions, and hopefully none of those will go wasted as I try to solve each and every particular queries I've got through the session today. Okay, best of luck for your exams for March 18. Hope you participate as enthusiastically as you did today, and hope to see a good attendance into the webinar tomorrow, and hope to see the same level of enthusiasm in the webinar tomorrow as we prepare for ethical and professional issues on day 2, which is a very important agenda and a very scoring agenda in P7. So I hope you get down with it. Okay, I'm just concluding my session now, and we meet tomorrow, the same time, 6 to 9 p.m. Pakistan Standard Time. I had a good day. I had a good day with all your questions and feedbacks. Thank you so much, and I wish you best of luck for your upcoming exams. Thank you.